Many people consider Warren Buffett one of the best individual investors there ever was. Today, we're going to take a note from Warren and think in decades instead of that short-term gratification that we're so used to. Hi, I'm Olivia Kirk.
I'm Tim Urich. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
There certainly is something to learn from Warren Buffett in the way he thinks about using money and earning money.
You know, he has the nickname of the Oracle of the Omaha, and it's well-deserved because his track record is impeccable. Now, are there times when his portfolio is down? Absolutely. But the reality is, again, because he thinks long-term, because he thinks in decades, he's very comfortable owning some of the stocks and the companies that he's purchased at the prices in which he purchased them. It doesn't mean that he's overpaid commensurate to where the value of that stock went directly after he bought it. It may have gone down 20, 30%. But when Warren Buffett makes a purchase, he's very confident that if he holds that position long term, he'll make the returns that he needs or wants because he's patient and he thinks long term.
Many think that Warren Buffett's success is really credited to that long-term growth, guaranteed growth, and strategic cash positioning, which is a lot of what we talk about when it comes to purchasing that whole life for cash value accumulation, right? How could we have that guaranteed growth, contractual guarantees that come with a whole life policy, access to that capital, and with that access comes the ability to use it strategically for opportunities. When things come up, you're able to take advantage of them.
Yeah, and it's interesting. Like Warren Buffett likes insurance companies, whether they're property and casualty, life insurance companies, reinsurance companies, because they have the cash flow coming in all the time. And he's able to deploy the cash flow into areas where he can get a significant rate of return. So he's looking at that guaranteed premiums, the guaranteed cash flow. He's looking at the guaranteed cash accumulation. And all of a sudden, he's able to deploy that using the float, so to speak, and deploy that in a way that's beneficial to him and his companies.
Right. So with a life insurance policy loan, what that would look like is taking a life insurance policy loan to take advantage of an opportunity, an investment opportunity, paying the loan interest, but also earning a higher rate of return on that investment, which is really a cool thing. And then once, you know, the investment has performed, you could certainly put the money back that you borrowed from the policy and then earn a reasonable rate of return as well.
Yeah, so you're sort of using the same strategy. You're taking the cash flow or the cash in the policy that's going to have this guaranteed growth. And then you're going to utilize that or deploy it to create an external rate of return, whether it be in another investment, whether it be in real estate, whether it be in a business, or even just to pay off debt. But either way, you're utilizing your money in a strategic way. And what people don't realize, in the process, they're getting control.
Yes. Yeah, for sure, because we have that guaranteed access within the policy. We have that guaranteed growth. By the way, when you take that policy loan, in most cases, you're not hurting the growth within the policy. The policy is going to perform how the policy is going to perform, whether you have a loan outstanding or not. So what that means is you're able to take a policy loan. The policy is still going to continue to grow and perform the way it would, but you're able to take a policy loan from the insurance company and use it to take advantage of things that need to be taken care of, right? Whether it be that high interest debt, whether it be buying a property, whether it be buying a stock, you're able to earn an external rate of return in one form or another while you're still earning that internal rate of return.
And that's a key feature in the process. So, you know, we started talking about Warren Buffett and his processes and how he's become this, known as this greatest investor. But the reality is he's really just blocking and tackling. He's using fundamentals, and it's really simple. The problem is most people don't have the discipline. Most people don't have the long-term thinking that he has, and that creates issues for folks. Also, the reality is he does have a lot of access to capital, and most people don't. And then the question becomes, why is that?
Right. And one of our specialties is looking at people's financial position and finding areas where they're giving up control of their money and ways that they could use that money more efficiently to put themselves in a better financial position so that they do have some cash to take advantage of opportunities going forward. And at the end of the day, it's not about chasing high rates of return, which is what a lot of people tend to focus on, but it could also be a losing game in a lot of situations, depending on timing, depending on markets, depending on a whole lot of things that aren't in your control. So instead, it's about having the access to capital in any situation, whether it's, booming situation or a crisis. And this is especially important as we come into a recession where the first thing to go in a recession is access to money. So how do you position yourself now to be in control of a pool of money that you could take advantage of opportunities in the future?
And that's exactly the key, right? Having options. The more options you have, the better positioned you are to go through whatever you're going to go through, whether it's good, bad, or indifferent.
Yeah, we always talk about, if you don't have access to capital, you don't even know opportunities are out there, right? Because if you don't have access to cash, people know that you're not going to be able to take advantage of opportunities. So when you have that pool of money, the opportunities just flow in.
And, it's a great point because there's an old saying, when you have access to capital, opportunities will find you. And believe me, they do.
So let's talk about how this applies specifically to small businesses. How could small businesses use this process to put themselves in a better position?
Well, if they're under financial stress, if they're under cash flow stress, they might be tempted to sell at the wrong time.
Right. Because, you have to get out of the business one way or the other, right? That's where your 90% of business owners' wealth is tied up in the business in most cases.
Exactly. So how could they? So usually, because their money's tied up in the business, they need to capitalize or monetize their business. And in general, they'll take a lowball offer because they're in desperate straits. But having access to capital, having liquid capital in a policy will prevent a business owner from making a bad decision to sell at the wrong time.
At the end of the day, Warren Buffett's rules are really similar and kind of parallel to Nelson Nash's rules. The same thinking long term. Don't be afraid to capitalize. Don't steal the peas.
And don't deal with banks.
Yeah. So in a lot of ways, he's following those rules as well.
Yeah. I mean, you're looking at the long-term thinking, guaranteed cash, being in control of the finance function, and not being at the mercy of others. That just increases your options. So there is a lot of similarities between Nelson and Warren Buffett. One of the things that most folks don't realize is Nelson Nash was trained as a forester. He went to college for forestry. He was trained to think 70 years in advance. He knew that he wasn't going to be around to see the result of the decisions that he was making. But that didn't mean he didn't stop thinking long term. And one of the things that really caught me was 3 months before he passed away, he called me and he said, "Look what we created." And the reality is, I had not much to do with that. But then he said, I was trained as a forester, and a tree can't grow unless it has fertile soil. And he said, you were fertile soil. You took my message and you were able to distribute it to the rest of the world. And for that, I'm thankful. And so, things have sort of come full circle. But the bottom line is, those principles, if we could employ those principles, whether it's Warren Buffett's or Nelson Nash's principles into our lives, it'll make our lives so much easier, so much better, and so much simpler.
If you'd like to learn more about how to put these principles to work for you, your family, and your business, be sure to check out our website at tier1capital.com to schedule your free strategy session today. Also, if you like this video, be sure to give us a thumbs up and check out these two. We picked them out special for you.
Thanks so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.